Hello, everybody. Myself Anurag Pathak. I welcome you all to the session of Editorial Explorer. So, what is the motive of this session? Is to see some important editorial which is published in a newspaper, and with reference to these editorials, we're going to find out some of the important keywords, paragraphs, and sentences, so that we're going to tackle our PT and mains. Now, this editorial I have taken from 2nd of June, 2nd of June 2022 from Business Standard, and I have listed in some of the important words which I have highlighted in different colors, and these red color indicates the keywords and the green highlighters indicates the important sense which we need to take out from these editorial. Now let us see these words one by one. The first word was the listed company. So which companies are considered as the listed companies? Whose IPO got released in the market or it is issued to the public. Now once IPO is issued to the public, it can be traded in stock exchanges. So we have famous stock exchanges in India, NSCs and Bombay Stock Exchange. So if the company's IPO and the company's name is listed in their index or indices, so those companies are known as listed companies. Now I am having an additive information here. This is the list of top 10 companies, listed companies of India on the basis of their market capitalization. So what is market capitalization? When we're going to dilute their all shares in a current market price is known as market capitalization. So hold this thing in mind that in 2022 in April, Reliance Industries holds first rank, followed by Tata, and then we have SDFC Limited. Now next word is EBITDA. What is that EBITDA? It is an acronym for earning before interest, taxes, depreciation and amortization. What is an amortization? It is a value deducted per year when of the intangible goods. If suppose any intangible goods are having a value or life for the 10 years, so what it's worth in a 1 year, when we deduct that is known as amortization. Now what is the purpose of calculating values after deducting interest, tax, depreciation and amortization? So that the company's real value can be calculated. Real value in the sense, what is the company's real earning? Value is income. What is the company's real income is there? And why it is to calculate? It is to demonstrate the company's actual worth. It is to see company's actual worth. Actual worth to whom? To its potential buyers or investors. And why to tell the potential buyers? So that those buyers can make some anticipation about its future growth opportunity. On the basis of that, they're going to trade in their stocks or their equity. Now coming to the next point, we have some volatile sectors. So what is volatile sectors and what causes a volatility in sectors money value or their like a company value, share values? It is the first component is investors' emotions. Then we have depressed economic conditions, inflation, deflation, and bankruptcies. These are the important determinants of volatility for the company's value. Now that particular article is devoted on the basis of how inflation is causing a volatility in the different companies' shares. Now on the basis of a 10-year average calculation, it has been noticed that the most volatile sector was energy sector. It is because it is guided by oil prices, and the oil prices are having too much influences of world scenarios. So we have a 2009 depression, we have a Ukraine-Russia war. So there are many international issues are making some impact on the oil prices, and that is why we have volatility translates to energy sector. So on the basis of stock prices, this volatility has been calculated here, but when you'll see the volatility in terms of the output produced, so it is agriculture in India. Agriculture is one of the most volatile sector. Why? Because it is a nature driven. So as we have like an unpredictable monsoon, that is why we have volatility is there in the agriculture. Now next is FMCG companies. So what is FMCG companies? FMCGs are the fast moving consumer goods industries. They are also known as consumer package industries, and they produce, and their products are sold quickly at very relatively low cost. So, and what are the subcategories of FMCG? So it holds non-durable household goods, then packaged foods and beverages, toiletries. Then we have some other over-the-counter drugs, dry goods, and other consumables. Now, what is the value of FMCG in India? It contributes 20% of country's GDP. 20%, and it is the fourth largest sector in India, like on the basis of March 2022. And within this sector, non-durable household goods contribute 50% of their value, followed by healthcare sector. It contributes 32% of their total output. And then we have other food and beverages and toiletries, which contributes around 18%. So these are the products which are sold in a very small margin, because of the many online companies now got involved in trading these all goods. So that is why their high sale rate is very important to offset low profit margin. So this is what is actually low profit margin. So that is what actually mentioned in the article. Now coming to the next point, there we have one paragraph which says the construction cycle is seeing more activity. Although this has led to a better offtake of the cement, margins are under pressure across the construction and infra development for the cement industries as well. Now, why in this construction cycle is having more activities? It is because it is the sector which has received very significant amount of FDI, foreign direct investments. So altogether, the 17% of FDI came to infrastructure and related sector. Also, government's big projects are running on infrastructure, and that is why it is predicted that in coming years, India's infrastructure will going to become world's third largest infrastructure industry. The next point is power generation had an excellent quarter and passed on the rising costs, but there is a red flag in the terms of the rising tide on receivables for the state discoms, and this payment delay is affecting the key supplier Coal India as well. So this is what is in a burning issues these days, because Coal India is running out of their stock, and that is why we have some issues related to the power sectors in India. So now you will find some comfort dealing with this article. When you have one look, you can find many important further points, so that it's going to support your studies and for UPSC. Thank you.